I just got approved for a $44,500 business loan inside the Relay business banking platform, and there wasn't even a hard pull on my credit. So imagine, a solid fix and flip deal comes up below market, or you get the opportunity to buy inventory at a price that you normally wouldn't get, and the only thing stopping you is having the cash ready. This kind of funding is what makes those deals possible. And soon you're going to see the two simple things that I did over the last 90 days that trigger this approval without me even realizing it at the time. You also see who's actually behind this loan once you peel back the layers, and why this kind of offer can feel like an opportunity but turn into a costly problem just as fast if you're not careful. But listen, on a separate note, if you want the no PG business card master list with cards that only do a soft pull and never report to your personal credit, just hit the link below to get access for free. So here's how this actually happened. And this wasn't planned. I wasn't out there shopping for loans. I didn't fill out anything. I was actually going after something else entirely. I was going for the Relay business credit card. And if you haven't seen it, it's actually invite only. You can't just apply whenever you want. You have to unlock access inside the account first. So that's actually what I was working towards. But what I did was, for the past few months, I kept things really simple. I had money coming into my Relay account consistently, and not just one big deposit, but repeated activity. I also linked my other accounts like my Bluevine business checking account, where I actually run a lot of my business. And that's it. There was no weird strategies, just normal business activity done consistently. Then something changed. After about 3 months of steady deposits, I noticed something new. Inside the Discover tab, I suddenly had the option to request access to apply for the business credit card. And that wasn't there before. So I clicked it. Then something unexpected hit my inbox. The very next day, I get an email. I'm thinking it's about to be the credit card, but it wasn't. It was a $44,500 loan pre-approval. Now, that caught me off guard because I didn't apply for that. And there was no hard pull either. So I started looking at what actually triggered it. And it wasn't about having one huge month or doing anything clever. It really came down to two things. One is consistency, not just how much money came in, but how often. If I look back at my actual deposits, January I had about $6,900 plus another $3,500 smaller deposit. Then February, about $6,900 again and a couple smaller hits. And then April, $9,300 of deposits. So I wasn't having one big month. I had multiple deposits hitting about every 1 to 2 weeks across different months. Some were big, some were smaller. But the pattern was clear. Money kept coming in. That's what matters. And then two, I had visibility. So what I mean by that is that I linked my other accounts. So including that Bluevine account, which is where I do a lot of my business banking. And that account shows, consistent weekly deposits. So now instead of Relay seeing, some deposits here and there, they're seeing weekly activity, multiple accounts, ongoing cash flow across the board. And that combination, I think, is what did it. But here's something that you need to understand. Just because you're approved doesn't mean it's a good deal. And just to be clear, this wasn't some soft pre-approval number. I went through the entire flow, all the way up to the point where they ask you to sign the agreement and finalize everything. So this isn't a range. This is the actual approved offer sitting there ready for me to accept it. Now let's talk about who's really behind this loan. This isn't Relay lending me the money. They're just the platform. The actual loan is being provided and serviced by a third-party company called Fundbox. So what's happening is Relay is basically plugging you into a lender behind the scenes and then showing you the offer right on your dashboard and then letting you accept it without ever leaving the app, which is why everything feels so seamless. But once you accept it, you're operating under Fundbox's terms, not Relay's. But let's look at the numbers real quick. So the funding amount was going to be $44,500, like I said. Total payback, though, is going to be $55,604. The APR, 45%. Estimated finance charge was going to be $9,647. And then it's going to be weekly payments at $1,069 for a term of 12 months. Weekly payment is a thing, right? $1,069 every week, not monthly, weekly. And that really changes how you need to think about this, because some businesses don't make money evenly every week. I went back and looked at my own deposits in that Relay account. Some weeks I had 6,000 to 9,000 coming in. Other weeks were quiet. Money was moving in big chunks, not smoothly, which is normal, by the way. But it's not ideal for a loan like this because if you hit a slow week, right, that payment still hits. And if it misses, now you've got late fees, overdue balances, multiple debit attempts, potential account restrictions. And God forbid if things escalate, right, they can call the full balance due. And that's the part people don't think about. They see the approval and get excited, but they don't look at how the structure actually works. So here's how I look at it. This kind of loan can work. It can, but only in the right situation. If your business is doing something like 20 to 30K per month consistently, and money is coming in every single week, then $1,000 weekly payment doesn't really shake you. It just becomes another expense. And if you're using money for something with a clear return, like putting 30K into inventory that you can flip into 45 to 60K within a couple of months, now it starts to make sense. You're using a loan to generate more money, not just move money around. But if your income looks more like mine does at times, where you've got deposits hitting in chunks and, then quieter weeks in between, that same weekly payment hits very differently, especially if your balance dips down into that 2 to 5K range on slower weeks. Now that $1,000 debit isn't small anymore, you're going to feel it immediately. And this is really how I think about these types of loans. They're opportunity plays. If you got a clear, fast win in front of you and the only thing holding you back is capital, then this kind of high interest money can make sense. But if you don't have that, it gets expensive. I mean, real expensive quick. Now, if you want far less expensive money and lower interest rates, you have to go to traditional banks. The problem is those banks move slow and typically require documentation. But you can actually find low doc funding opportunities by knowing what to look for and where banks hide them in plain sight. So you got to watch this video next to see how to dig up opportunities most people never even find by going straight to those local banks and getting past the gatekeepers and positioning yourself in a way that makes you look credible. Thank you for watching.